downloads. And even if you downloaded maybe the first 2 or 3 booklets, again, we've added more booklets since then. And so you can always just resubmit the form and you'll get all the new booklets as well. And those are absolutely free of charge. There's no hook or catch or anything like that. We're not going to put you on a subscription list of any kind, just a way to share the information and the knowledge that we put together here week after week.
Yeah, what has been blowing me away is the fans that show up at the thing. I got that orange jacket on, and which I should wear to the show.
I think so.
It's comical because as I get to meet our listeners out there, they just are appreciative of all the information.
Yeah.
And then our 2-hour program we're doing, which is a life of a board member.
Right.
Everybody's walking out with takeaway that they're just going, this is epic. And I've had not 1, not 2, not 10, 20, 30, 40. The whole groups are walking out saying this was the best program they've attended as a board member to help them run their association.
That's amazing. I know you love the trade shows. They're a lot of fun, a lot of energy and excitement. But I definitely vote for you wearing the what I call push pop orange or orange sherbet jacket to the show. So,
well, you'll love this. At the opening of the show, I always go up in the front and there's 50, 60 people in the audience, and I open the jacket up and I got that off-color orange shirt and I go, what do you think my wife said to me today when I was leaving the house? Every woman in there goes, you're not leaving like that, are you? So it's been a lot of fun.
So you, by the time folks have heard the show, you'll have done the trade shows down in South Florida. You did one in Orlando this week. You'll have done, by the time this airs, you'll have done the one here in Tampa, which is Friday. But you've got a show coming up. Where did that sheet go?
West Palm Beach.
West Palm Beach, which they love us down there. We're on WJNO down there. And also a huge market for us. We hear from them every single week through our Facebook account and through our email inbox. And so that should also be an incredibly popular trade show.
Yeah, and it's on the 24th, and it's at the Convention Center. The L&L Group provides free lunch and parking. So, I mean, if you just want to come out and get a great lunch, but more importantly, come there about 2-something and be part of the Condo Coaches.
Yeah, and of course you'll have a booth there all day long.
We have a booth, but I got to tell you, when we get in there in that life of a day or the life of a board member program, I've just been shocked at how popular it's become, and it totally energizes me because when you get the good feedback and the boards are asking questions, and at the end we say, did you take away one thing that's material, not a brochure, but something that's material?
Yep.
Everybody raises their hand.
Well, and something that they can act on right away when they get back to their next board meeting.
Absolutely.
So, all right, well, we're going to kick off the show as we do every week by tapping into our Facebook page and our inbox. But before I do that, joining us today, Jimmy Clark, insurance coach. We're going to kind of pick apart the whole insurance process. I'm sure a lot of people are reevaluating their insurance policies and trying to figure out, what's next, especially after such a busy storm season. So Jimmy's going to be joining us on that. And Jimmy, if you feel that you can contribute to any of the questions that come up here in the rest of this segment, feel free to jump in. But we're going to open it up with a question from Bill. And Bill, I don't recognize the area code, but Bill's asking, how often should an HOA have an audit? Which is a good question.
Well, an HOA, depending on their size, could be required to have it every year.
Yep.
My recommendation, if you're running any kind of thing that you have a fiduciary responsibility for the money, just get an audit. I just had a group that met with me at this trade show, and they said their management, they didn't have a management company, they were self-managed and everything, and they never had an audit. This guy, they couldn't even do the checkbook, so I gave him some coaching on how to get the checks and all that.
Right.
But an audit's just, it's not very much more expensive. And the cool thing about it is the auditing firm is required to do certain things per their code of whatever.
Their own standards.
Yeah. So you get a really good view, and they'll give you an opinion statement.
Yeah, and it doesn't hurt to do it. I don't know, every 3 to 5 years?
Well, yeah, a lot. If you're a certain size, over $350,000, I think it is, you have to have it done every year unless you vote not to do it. I think it's silly not to do it every year.
Yeah, especially the larger the community.
Well, yeah, because you're handling other people's money, and you've got a lot of transactions, you've got a budget, you've got just a lot of things going on. And you want to make sure that you're doing it right so that you don't get in trouble.
Well, we talk about it all the time, how essentially you're running a small business.
Oh, you are running, not essentially.
Yeah, and so you need to operate as such, and
Right.
and that goes making sure that you have a solid understanding of the financial status of your community. That's why we've done the booklets, understanding your community's finances, because so much of, I think people severely underestimate how much of their role on the board is managing the finances of the community.
Well, we did one condo coach deal to help one group, and out of it, we're raising money for them with banks and stuff. But when we analyzed the balance sheet, we found $150,000 error that had been going on for 6 years, and it was a developer's reserve that the statute of limitations had gone out, and nobody ever checked it. So now
Wow.
the guy gets off free. They have to write off $150,000, and this isn't some $1 billion community. I mean, this was real money, real impact.
Because the developer, just stayed quiet.
Well, he stayed quiet, but the management company didn't. They didn't have audits. They were just
Right.
doing reviews, which means the accountant just does what you tell him. You give what you give him.
Right.
It was, and I felt bad about it. And
Wow,
the
that's a lot of
management
money.
company, the management company argued with me, and at the end of the day, I was right.
Sure. Well, and again, you don't have any skin in the game.
No.
And that's what we tell people when we go out to these communities and we go and we help them with their issues, regardless of financial or otherwise, is that we're not here to take sides, not with the board, not with the residents, not with the property management company. We come in as a neutral body, and we're going to tell you how it is in black and white.
Yeah, I don't have a dog in the fight.
Right.
So when we do a financial analysis, it's done just with the facts. And somebody wants to argue about it, they're welcome to argue about it. If they want to point, we're not like going, well, if you had used us, this wouldn't happen. No, we're just helping people.
Well, I've seen from the insurance side, when you do an audit, a lot of times you'll catch, kind of to your point, the $150,000. We actually just had an audit done on a condo association where they actually found out, unfortunately, that the property manager was invoicing late fees and getting some of it back as cash, and then literally taking that cash and stealing it. So
Oh, wow.
that doesn't sound like a lot of money, but over 5-6 years, that ended
Sure.
up
No,
being
it's real.
$15,000-$20,000, right?
People have gone to jail for far less.
Right. No, and then the association prosecuted. And at the same time, from an insurance standpoint, the insurance carriers, especially your crime insurance carriers, like to see that you are doing an audit and you do have kind of a third party evaluating those financials.
Yeah.
Good point.
All right. Well, thank you to Bill for sending in that question. Now we got a Bob. So Bill and a Bob, and Bob writes to us from Southwest Florida, 941 area code, and he's got an owner question. So again, we love hearing from our owners as well. Thank you to Bob for writing in. He says, we recently had a skylight leak causing the popcorn ceiling inside to drop out around the skylight. The association is fixing the skylight, but not the popcorn. Why should we pay for the popcorn if the skylight caused the problem? Do we hear that there may be some law changes regarding that type of situation? Thank you, Bob Benjamin from Bradenton.
Well, the condominium association is responsible for the drywall out to the wall.
Right.
So popcorn is considered a finish. So he would if they finish the drywall and it's all fixed,
Yep.
he would have the expense of the popcorn or wallpaper or paint.
Sure. Well, yeah, and we've said that it's been a while, but that usually comes up, and really that's all we've been consistent on that, which is, from the drywall out. That's your association handles that. From drywall in, it's on you.
Well, and that's important to keep reemphasizing, because I can't tell you how many boards I find they go and we go help them out and we look at a unit, it's all moldy.
That's well, thanks again to Bob from writing in from Bradenton. All right, going to squeeze one more question in because it's an easy one. Deborah writes to us from Pinellas Park, and she says that she couldn't get the playbooks to download for her. There could be any number of reasons for that, but she'd also love hard copies, and this is something, we haven't talked about in a while, but if anyone prefers the hard copy, some of these books are a little longer than others, and if you would like a copy of our playbooks that we were talking about at the start of the segment, we will absolutely get those delivered to you, most likely by hand, because now we've got Condo Coaches throughout the state, or we will mail them to you, and she was smart enough to send us her address, so we'll make sure to get you hard copies for her and her 6 fellow board members.
Perfect.
More details on the playbooks at the start of the next segment. It's the Condo Coaches radio show. Want to be a part of the show? Give us a call, 813-331-5415, or email us, help@thecondocoaches.com. We'll be back.
Contact the Condo Coaches online at thecondocoaches.com. More of the Condo Coaches is coming up next.
Life is full of bittersweet transitions. It's difficult to know how these changes will impact us over time. For some people, difficult transitions like retirement, divorce, or loss of a loved one can hit harder than expected and may contribute to feelings of hopelessness or even thoughts of suicide. The risk of suicide is even higher for men over 50 who served our country. Guys like me. That's why support from friends and family makes such a big difference. Every day, your actions could help save a life. Together, we got this. Learn how you can help save a life at veteranscrisisline.net.
Welcome back to the Condo Coaches, online at thecondocoaches.com. Here's your host, Johnny Torres.
Thank you again for listening or watching our show, and don't forget you can do so anytime, 24/7. It's on demand all over the internet, be it the condocoaches.com, that's thecondocoaches.com, our website. You can also find every single episode on YouTube, so just go to youtube.com, search the Condo Coaches, and of course you can go on to our Facebook page where we stream live. Every episode is on there as well, but my favorite, and the one I listen to in the morning on my way to work, is the podcast. And you can get that on iTunes, SoundCloud, Stitcher, whatever your favorite podcast platform is. Search the Condo Coaches and subscribe, and you're going to get every episode of the Condo Coaches right to your mobile device. And we can't appreciate you enough for doing that, because we do get some ideas to how well we're doing based on how many people are listening and watching all the videos. And we know that we're hitting on the right topics, when we see certain videos do better than others. So it really is something that we depend heavily on in terms of the direction of the show. And so subscribe, like, share, all that good stuff when you're listening to or watching the Condo Coaches online. I just wanted to knock out two quick questions, because we're still backed up with questions from even last week. But these are somewhat related. And so we want to thank Susan, who says she tries to listen to the radio show every Saturday morning. She loves it. She's emailing us from Clearwater. She says also while driving, and she heard this morning that she could request a form that would calculate how the delinquencies are affecting each owner. Would it be possible for us to email her that form we were talking about? And the question, or the answer, is yes and yes.
Yeah.
It's incredibly a popular form that we get requested, and people are just blown away, regardless of how big or how small, just how the cost of those delinquent association fees get carried on to the rest of the owners.
Well, the cool thing about that, with breakfast, we were talking, everybody's entitled to their opinions,
Yep.
but you're not entitled to your facts. And I've been using that for the last 25 years. Well, this spreadsheet, they just put the facts in. And over here, we had one association put the facts in. All the paying owners were paying $4,500 each for the delinquent owners. Wow. And when they found that out, I almost thought there's going to be a riot. They didn't even know. It's like, well, these guys are delinquent. Well, we should be nice to them. Okay, then pay $4,500 out of your budget for them. All of a sudden, they didn't love them as much.
Well, and that's why, again, we were talking about our playbooks. And for those of you who are not downloaded our playbooks, we have now, we're almost on number 8.
Yeah.
And these booklets, I used to have them all memorized. I can't even memorize them anymore because we've got so many of them. It started off with this one, which is the top 10 most important things you need to know. And this book, a huge success. It really lays the groundwork for being a board member. So it's the top 10 most important things you need to know if you're an HOA
by the way,
or COA board member.
That is still our most popular.
Yeah. And also a booklet you'll definitely need coming up, the ABCs of holding elections. That's another good one. Typically a very complicated issue for most people that don't have experience in that area. Or like Susan just emailed us about, collecting delinquent association fees, the lifeblood of your community. Again, if your residents aren't paying their association fees, that means the rest of you are. And so make sure you get caught up on that, and then make sure that you understand your community's finances. So we've now done, I think, 3 or 4 booklets that are solely centered around the finances of your community. And you can download these absolutely free on our website at thecondocoaches.com/playbook. thecondocoaches.com/playbook. And waiting patiently over there next to Mr. Dean Akers is Jimmy Clark. Again, we're here to talk about insurance today. How you doing?
Good. How you doing?
Great. Thanks so much for being here.
Thank you.
So, again, it's been an incredibly busy storm season. I appreciate you coming in because I'm sure your office has been slammed as well with insurance claims and, people wanting to reevaluate their policies. Let's start off with some basics. Is it kind of like health insurance where there's like a window that you have to like wait for, and then you gotta make sure you don't miss your window to like renew your policy or to change it or anything like that?
It usually makes sense to renew your policy when your renewal date comes up.
Yeah.
A lot of, especially in the condo association marketplace, there's provisions in the policies that basically fine you if you cancel it midterm. So it can cost the association money if they cancel midterm. With that said, it's a best practice to have your renewal outside of wind season. If you're in Florida and there's a hurricane impeding, even if it's just a renewal with your insurance carrier, they may not let you renew the insurance if there's a hurricane headed your way. So
Sure.
Imagine that. You just want to do your renewal. There's a hurricane there's a zone, right, within a certain amount of miles of the state of Florida. And then you want to buy insurance, and they say, no, sorry, we can't renew your coverage right now because there's a hurricane on the way.
And I know it differs from company to company, but there is a cutoff, especially when a storm is on the way. At that point, the company establishes a cutoff date to which they don't accept any new policies, and you better hope you got your policy in before that cutoff date, or you're not going to be covered if that storm hits.
That's right. So that's why you really want to just get your renewal date outside of hurricane season, or we call it wind season. So that you don't ever have to deal with that, right?
So what is the best season, at least for those of us here in Florida? We do get people listening to the show across the country, but what would you say, at least for those of us here in Florida, when's the best season to renew your policy?
So we see most of our renewals happen kind of between 1/1 and 6/1, January 1st to June 1st.
Okay.
That's, I'd say, the vast majority of our bulk.
It's a big window.
It is a big window. And after that, you can get early storms or late storms. The 2/1, 3/1, 4/1, those are good days. And truthfully, the only kind of downside to that is if you do it later in the year, it's a little tougher to budget, right? So when you're building your budget, like right now, if you have a 5/1 renewal, it's you're trying to just kind of see the crystal ball on what you're going to see.
Does it prorate for the year? In other words, does it kind of accumulate like the later in the year that you get it, or does it still?
It's all one premium at
Okay.
once, but if somebody's asking me, what am I going to see January 1st renewals today? It's a little bit easier than say, you don't know. And one of the misconceptions, which we'll talk about, is people think their premium rates are predicated on what happens in Florida. Well, that's not true. We have the California fires happening right now.
Sure.
The same insurance carriers that write us here are writing in California, and they're taking insured losses. So all this stuff affects rate. So I don't know what kind of disasters may or may not happen between now and May. So it's it's a little crystal ball, but it's the further out you're asking for budget numbers, it becomes a little more difficult.
And so, to that note, again, we're seeing forest fires in mass quantities. I mean, what's happening now in California is one thing, but we've even had fires that were not as large, but certainly, the large fires out in the West. And then, of course, the storm season we've had here. And so, do you find that a lot of people are going to scramble to try to, reevaluate how much they're paying, what's covered, what's not covered?
Well, I can give you, I think outside of just actual losses, what people individually have had, to give you guys an idea of, the number of storms and what's happened this year. We talked about Northern California fires. Those numbers are now coming in $3 to $6 billion in losses, right?
Wow.
And so not only that, the Mexican earthquakes, right?
Sure.
So that's $2 to $3 billion.
Because some of these companies are international, so
Absolutely.
they would fall into the Mexico earthquake.
Well, and you've got to remember, something interesting a lot of people don't understand is your insurance company actually buys insurance from reinsurance companies, right? So the reinsurance companies insure all the insurance companies. So a company in Switzerland like Swiss Re is a massive reinsurance company.
Okay.
So when these catastrophes happen, it's really hitting their bottom lines, which drives up the insurance costs for the insurance companies, then pass it on to consumers. So that's really why all this.
So these disasters have a global effect.
A earthquake in Japan can have an effect on pricing in Florida.
Wow.
Wow.
Yeah,
That's incredible.
yeah. So you've got those numbers, and to keep these numbers in perspective, Katrina was about a $50 billion event, huge event, right?
Sure.
So with Harvey, Irma, and Maria, the numbers right now are ranging between $75 billion and $160 billion of insured losses.
Wow.
So really, really big numbers.
And that's just insured losses.
That's exactly right. So
Yeah.
the difference between insured losses is an important number, and unfortunately, and my heart goes out to everybody that had losses that are listening to this show. But there's now major deductibles you're contending with as an association, right?
Yeah.
For windstorm, and so this is excess of the deductibles. So really, really big numbers, and obviously a very wide range. So the people we get those numbers from are kind of considered the best practice, or have the most analytical data, which is RMS, AIR, and Karen Clark and Company. And those three companies are the ones that come out, and you see them in the news 24 hours later. It's going to be a $14 billion event. Well, they're the ones that have all the kind of actuarial, geeks and no better terms.
Crunching all the numbers.
Crunching the numbers.
Yeah.
And they're usually pretty accurate. But that's between 75 and 160 billion. That's a huge range. So there's a lot of unknowns with what's out there right now.
Well, and business-wise, it makes more sense for them to spread out that damage or those losses rather than to compound them to one particular country,
right,
or one particular part of the world.
That's right. So they're looking for spread of risk as well.
Yeah.
So, it's going to be interesting overall. And we've seen a number of reductions year over year,
Mm-hmm.
and I think most associations have enjoyed prices going down, right? And I'll tell you, it's what we're hearing is that the insurance companies' reinsurance renewals, they're looking for 5% increases. We haven't seen increases there in probably 8 years.
Okay.
Overall, J.P. Morgan just came out and basically is, they obviously have all their financial geeks looking at all the insurance carriers, and they're thinking it's going to have to take a 10 to 15% rate increase to keep rates okay.
All right, well, we're going to talk about exactly what to look for and, again, how to manage your expectations if you're looking at a policy renewal. Insurance on the Condo Coaches Show, segment 3, coming up next.
Contact the Condo Coaches online at thecondocoaches.com. More of the Condo Coaches is coming up next.
Attention men under the age of 35. You know what really impresses the ladies? When a guy has a few drinks and later gets pulled over for buzz driving. That could cost you around $10,000 in fines, legal fees, and increased insurance rates. There goes let's grab dinner and a movie. Oh, I know. You drive more carefully when you're buzzed. You've proven that hundreds of times. A woman admires that kind of confidence. And you've practiced how to speak if a cop does pull you over. Slowly, clearly, and politely like, "Good evening, officer." A woman admires that kind of foresight. And what woman doesn't find it adorable that you call it buzzed even though the law calls it drunk? You could kiss $10,000 goodbye, along with any chance of having a girlfriend. Because nothing says, "I'm a catch," more than a guy who lives in his parents' basement and calls it my place.
Buzzed, busted, and broke. Because buzz driving is drunk driving. A message from the National Highway Traffic Safety Administration and the Ad Council.
Welcome back to the Condo Coaches, online at thecondocoaches.com. Here's your host, Johnny Torres.
Thank you again for listening, watching the Condo Coaches from wherever you may be doing so. Again, we carry the show 24/7 on Facebook, YouTube, and our podcast. You can subscribe at any time and share it with all your friends. And again, these aren't fun topics we get to talk about, but very necessary topics because they do affect you, your community, your lifestyle, and, of course, your income. And so we want to make sure that we're providing valuable information to you, whether you be a resident, homeowner, or property manager. And, again, for more information on us, visit thecondocoaches.com. Joining us today, Jimmy Clark, our insurance coach, and head coach, Dean Akers. We're picking apart, what really the landscape of insurance is going to look like over the next, what would you say, probably 6 to 9 months?
Yeah, I'd say for the next 12 months.
Next 12 months.
Next
Okay.
year.
because even still, the year's not over. I mean, we don't know weather-wise what the rest of the year has in store for us. We're obviously coming to a close on what's typically hurricane season here, but as you were just educating us on, really we need to even be watching what happens in terms of winter. And are we going to get blizzards? Are we going to get some really bad winter storms coming through that again can also affect your insurance policy?
Right.
So let's start off with a question we were talking about off air, which is if you're going to start budgeting, if you're going to start kind of planning this out, what's the process? And really, you were talking about maybe to expect about a 5% increase, or that's at least kind of the rumor that's going around in terms of what people can expect to see.
So I think if I was sitting on a board, there's three different situations I could run into. So it's a 5% increase for the insurance carriers, not the individuals, right?
Okay.
So if I don't have to do a new appraisal, I can just kind of roll what I'm having. I haven't had any losses. We're conservatively telling people 10%. We think that will give enough kind of fat in it that will, their insurance agents should be able to perform in there. And by the way, I wish you guys would have had me on the last 8 years where I could always just talk about decreases. Of course, the one time I get asked, I'm like, oh yeah, I get to talk about increases. I haven't talked about this in so many years.
Yeah, you get to come in and be the bad guy.
Yeah, and then the second situation, and this is something I think that boards may be missing, is, in the state of Florida, you have to get an appraisal done every 36 months, right? So if you haven't done a new appraisal, construction costs have absolutely skyrocketed, right?
Yep.
So not only are you going to have a 10% increase, but you may have an increase of values. So that's kind of a double whammy.
And not only just naturally because of the cost of goods and the cost of labor, but also because of the increase in demand.
Right.
From all the storms, and especially here in Florida, where it doesn't matter which coastline you live on, you're probably seeing a high demand for contractors and all types of trade work to be done on your home or your condo.
Yep. And yeah, exactly. And then you've got the third bucket, which is the bucket nobody wants to be in, but you're the ones who have actually suffered an insured loss. And this is only for windstorm. You really have to worry. The NFIP isn't going to really change your rates if you've had a loss. But if you have had a loss, you really just need to work with your insurance agent and develop a really good process to make sure that you can keep your costs down. Because if you've had a loss, you're going to get hit harder than everybody else, more than likely. So, you got to sell the story, especially if you lost a new roof or lost a roof. Talk to them about, I've got new wind straps. I have this new great roof going on. So we've actually reduced the risk, even though we've had a paid loss.
Well, and again, to that note, because we are talking about the budgeting and, of course, the budget and the increase expected in terms of insurance policies, just want to reiterate, because we were talking at the top of the show about our booklets. We have 2 of them that are key to you: understanding your community's finances and collecting delinquent association fees, okay? Because both of these go hand in hand. You really can't have one without the other. And also, we do financial assessments as the Condo Coaches free of charge for any community association out there, neighborhood association, condo association. Call us, email us, get a hold of us through our website, and we will do a financial assessment at no cost to your community. But it gives you really a solid understanding of where you are financially and really what adjustments you are going to have to make for next year.
Yeah, I would. I'd recommend. We've been getting them from the plus 55 communities.
Yep.
I'd recommend it because the plus 55 communities that are being impacted by this, most of those people are now on fixed income because they're retired. And what seems small to maybe somebody has a normal regular income is pummeling them. And we attended some board meetings recently where just $25 increases has just got everybody like, I can't do it.
Sure.
So it's going to be incumbent on everybody to really deep dive their budget, see where they can save money, make sure they're talking to their constituency about the amenities, what can they do to just everything, risk for insurance. And because they're being impacted.
Well, and to that note, don't forget head coach Dean Akers is going to be down at the Home and Condo Expo, L&L Expo, October 24th in Palm Beach County.
24th, yep.
Yep, and so make sure you don't miss that. That's going to be a great learning experience as well. Getting back on topic with Jimmy here when talking insurance policies, let's say that they decide to go shopping, right? So they're not going to automatically renew. They want to do a little bit of shopping. what are some of the things that you see people typically look over, right? So what are the things that they should be looking for but don't in the shopping process for a new policy?
So I think right now the one of the biggest opportunities, and I luckily it's been out there for a bit, but the flood program right now is no better terms. I've been using the term underwater, right?
Yeah.
So the NFIP, the federal government programs, $25 billion in debt before these losses. And we've been seeing lots of increases, right? So right now, I said 10% for everything except flood. Floods capped at an 18% increase for the basically the non-subsidized flood. They now allow private flood insurance. Okay, so there's a lot of markets who will do this, and we've seen 30-40% reductions in premium. Now, granted, private flood's private money. They're not dumb, so they're not taking the risks that flood. I actually heard a story in Louisiana, a building that's $130,000 in value, and it's with the federal government. They've paid out $800,000 in claims over the last 5 years because it's flooded 6 times. They're not going to write that one, right?
Private companies not going to do that.
They're not going to write that. But I can tell you, at least in our book of business, they've been cherry picking the good risks and saving 25, 30, 35%.
And is that something that's publicly available to these companies? Is that type of information available? So when they are shopping, does the insurance company have access to some sort of report or record of knowing how many insurance claims have been done on that particular property?
So you basically have to report that information to the insurance carriers when you're shopping it. As the association or the insurance agent.
Yep.
Their insurance agent should have access to that data and should be providing that information to the underwriters. So they're getting that information. The private companies know what they're doing. And they are just like a lot of companies in Florida did with Citizens, right? They cherry pick the good risks,
sure,
and continue to write those good risks.
Well, and I think after Harvey, Irma, Jose, Maria, I think you have to realize that maybe some of the coverage that you maybe used to waive off, that you might want to revisit that. And I think people were scared enough, to now realize that they really do need to get as much adequate coverage as possible and not just look at the bottom line as the deciding factor.
Well, and I think, a couple things that I think people need to make sure they're looking at is there's a lot of insurance carriers that really skinny down the insurance, right? So if somebody's a lot cheaper than somebody else, there's generally a reason, right? So, things like water backup, right? So, that happens all the time. Your drain lines, all kinds of ways for your water to back up.
Well, we've talked insurance, and we talked about, where, again, maybe the toilet overflows and, and all of a sudden that's not covered because you may have it covered for flood, but not for toilet overflow. And, and so now you find yourself in that kind of position where you're having to pay out of pocket for it.
Is there a policy that includes debris removal?
So that's called Ordinance and Law Coverage, and many policies do. And so, that's actually another. So ordinance and law is actually a pretty interesting coverage. So the best way I explain it is if you have a single pane window in your building and the building burns down and your code now requires hurricane windows, the insurance company only is required to give you the money to replace a single pane window, and you're out of pocket for the difference between the single pane and a hurricane window.
Oh, wow.
So ordinance and law coverage actually will help with the debris removal and help replace the windows with the hurricane windows and bring you up to code, hence why it's called ordinance and law, as well as if, say half your building burns down and the city comes in and says you have to demolish the whole thing, the insurance carrier will only pay you for half the building because only half the building burned down, right? So you want to make sure that you have ordinance and law coverage in a healthy amount. In particular, if your building's older, you want a lot of ordinance and law coverage.
Well, we're hearing of communities that are having to take out loans or their lines of credit, but they're realizing that the extent of the large extent that to which these bills can add up when it comes to debris removal, tree removal, and garbage and that kind of stuff that came after the hurricane.
Well, and I'll tell you something I think a lot of associations have missed. So there's a Florida statute, 627.714, that basically requires anybody in a condominium association, this is specific to condos, that their personal insurance have special assessment coverage. So what that means is let's say you had a loss that was $100,000 below your deductible, and you have 50 different unit owners. Well, you can actually send them a special assessment for the damage, and then they turn it into their personal insurance carriers, which a lot of their personal insurance carriers don't have a deductible. And instead of them paying the $2,000 out of pocket, their insurance company will actually reimburse the association for their deductible. Wow. So I'm seeing all these associations trying to use, reserves or whatnot to pay their deductibles. And no, if you wordsmith the special assessment correctly and have them turn it into their personal insurance, which by statute is required to be in their insurance, their personal their personal insurance policies, that insurance a lot of times will pay for the special assessment. So they don't need to be paying this stuff out of pocket and dealing with it.
I guarantee you they don't know that, because I never knew that, and I'm sitting there going, wow.
Well, and for those of you listening, to this through the radio broadcast, don't forget, if you want to hear this again, go to our YouTube channel, Facebook, or our podcast, and you can get that information again, because that's important to look into. And is that something that an insurance company will help them draft?
Their insurance agents should, in conjunction with their attorney, right?
Sure.
But we've been helping our clients go through that process, because the damages were bad, but there weren't a lot of really big insured losses,
right?
So we're helping those with the below the deductible do that.
All right, we're talking insurance policies. Jimmy Clark, our insurance coach, head coach Dean Akers. If you've got a question, an issue we can answer for you, whether it's related to the topic or not, thecondocoaches.com, 813-331-5415 is our phone number, or email us, help@thecondocoaches.com. We'll be right back. Final segment next.
Contact the Condo Coaches online at thecondocoaches.com. More of the Condo Coaches is coming up next.
It only takes a minute to find out if you may have prediabetes, and you can do it at doihaveprediabetes.org. But you're probably not going to. Nope. I'm sure you've got a perfectly good excuse. Kids, work. I get it. You're busy. So what better time than now? Let's begin. Raise one finger if you're a man. Ladies, none yet. Oh, count in your head if you're driving. Now, 3 more fingers for everyone over 60, 2 over 50, 1 over 40. 1 more if you're not physically active. Another finger if anyone in your family has type 2 diabetes. Another if you've got high blood pressure. If you're overweight, raise another finger. 2 if you're very overweight. And 3 if you're really overweight. You've just taken the world's first audio prediabetes test. And if you're holding up 5 or more fingers, visit doihaveprediabetes.org or talk to your doctor. There's no excuse, because prediabetes can be reversed.
Brought to you by the Ad Council and its pre-diabetes awareness partners.
Welcome back to the Condo Coaches, online at thecondocoaches.com. Here's your host, Johnny Torres.
We got Jimmy Clark, insurance coach, dropping some truth bombs on us today. Yeah. He's sharing a lot of great information. If you've been missing out, we've been talking insurance policies here when it comes to your community, neighborhood, homeowner association. Dean.
The head coach is going to make this mandatory show, because the head coach just learned more today.
Yeah.
Jimmy, you've been incredible, and I'm going to bring that up in some of my visits. This has been one of the most enlightening shows. If it doesn't skyrocket, I'll be I don't know.
Yeah, well, let's kind of revisit some of the points you made. One being, of course, that the option of private flood insurance, which again, especially here in Florida, where flood insurance has been a major issue, even at the legislative level, there are private options out there.
Yeah, no, there's several now. We started doing this basically once the Bigger Waters Act came out and started really allowing it.
Yeah.
And they're writing a lot of business. I think a lot of agents have been slow to adopt it for one reason or another. But just make sure you're asking your insurance agent, hey, give me 3 or 4 private flood. Who have you gone to for private flood?
Well, and then the other one you just let us know in the last segment was, of course, the kind of the write-up of a special assessment, and how, if written properly, you can pass that on to your residents, who then you need to instruct for them to pass it on to their insurance companies, and their insurance companies oftentimes will reimburse the association, and basically leaving not only the community but the resident hands free of that whole financial situation.
That's right. But, keep in mind that it is a special assessment, so everybody has to pay it regardless if they have an HO6 or not.
Right.
So, but at the end of the day, they're kind of required to have an HO6. So, it's if they don't, they're probably writing a personal $2,000 check. But it's a great way not to use reserves for something you shouldn't be using reserves for.
Yeah. Again, we talked about, first half of the year being ideal. And how soon after, let's say that you had some damage following the hurricane, you filed some claims. If you are looking to switch companies, if you are looking to shop, what's typically there? I mean, is it just seeing that policy through to the end? Or if you just decide to, kind of jump ship on your carrier, what are maybe some of the drawbacks to doing that?
So I'm going to hit on two different things. So our process internally, which doesn't mean it's right or wrong, is we generally are meeting with our clients 4 months before the renewal, right? So that's when we're going out to the other insurance carriers, devising a strategy, and really working on it. I think 4 to 5 months is a good timeline. Insurance carriers on the kind of commercial side, which is really homeowners and condo associations, they're not, quote, one day. They take a lot of time to underwrite, and the insurance carriers move slow if you've ever dealt with them before. So, start well in advance and start working with them. The second thing is, and I just want to bring up, because we're seeing this after the hurricanes, is there's a lot of adjusters. So you may only think you have $80,000 in damage or $40,000 in damage.
Right.
Two things is people may say it's under deductible, don't report it. Report it. Make sure you're reporting claims even if you don't think it's going to hit your deductible. And the reason is a lot of the adjusters that are coming in are third-party adjusters. They haven't maybe even adjusted much in their life. And we have found multiple scenarios where the adjuster has come in and said, oh, you just need new roof tile, or you just need, this or that on the roof. And then we've gone out and got a second opinion, and we have found there's structural damage to the roof. The whole roof needs to go.
Yeah.
So, it's not necessarily the insurance carriers trying to pull a fast one.
Yeah.
It's just the adjusters aren't even going on the roofs to look at this stuff.
Well, not only that, we had Nathan Shepard, who's a public adjuster, on the show recently,
good.
Which was a fantastic show. We definitely recommend people go look up that episode.
Yep.
But he also talked about not only the difference between a public adjuster working in the best interest of the homeowner, but also the insurance adjuster working in the best interest of the insurance company.
Yep.
But the fact that they are spread so thin because we've been hit so hard this year, that they are pulling people from other states who have no idea what to look for when it comes to hurricanes, because they come from parts of the country where there aren't hurricanes, and they're not used to looking for the types of damage that we see following the type of storm season we've had.
Yeah, there's definitely, in no better terms, a lot of very, very junior adjusters, and just because they're cutting their teeth on a big storm, and it is what it is. People want, if you want a senior guy, it may take you 6 months to get a check. So it's that. I think that's a great resource that he came on the show.
Yeah, so we've been talking about kind of some do's and don'ts when it comes to the insurance policy. Remind us again when we were just talking about debris removal and some of the expenses that come along with that, the name of that type of policy or that type of coverage.
So ordinance and law, and then sometimes it's scheduled out specifically as debris removal as well. There will be a sublimit. So, and that's the other thing. Whenever you're getting a proposal from an insurance agent, have them detail all the endorsements, so understand exactly what you're buying. I'll give you a good one that happens. All these insurance carriers are throwing on there is if your roofs are older than 10 or 15 years, they'll turn the valuation to actual cash value. So if you're a finance guy like Dean is, you understand that means the depreciated value of the roof.
Sure.
So let's say a hailstorm or a windstorm or whatever kind of random blows off or hurts your roof. Well, what you may have to spend $200,000 for your roof, but the depreciated value, because it's a 15-year roof, is zero. So you literally will get nothing. So you want to make sure the insurance agent is giving you all the endorsements. And unfortunately, some case law states that after a few years with the same insurance carrier, it becomes more or less the responsibility of the buyer, because it's a commercial company, to understand their coverages. So make sure as a board member you're taking the time to really dig in and understand what you're spending all this money for. It's a number 2, 3 expense on your financials.
Well, not only that, the insurance landscape changes year after year, based on legislation, based on any variety of factors, just the industry in general. And so it doesn't hurt to at least kind of go out there and test the waters and see what else is available.
Yep, and I think, one of the things, in my opinion, the best way to do it is instead of going out and hiring, getting multiple agents, is interview the agents. Figure out who's going to be best for you and who's going to represent you the best, and then let them go to the insurance carriers. Because really what ends up happening in our world, if it's an insurance agent, me, and 2 other people, we're all going to the same carriers, and whoever gets in the submission first wins. So imagine how bad that data is if you don't really take the time to put it together, a nice submission that an underwriter. And the best way I can explain it to people is if you've ever put together a loan package for a loan, that's what underwriters are. They're loaning you money, right? So you want the best loan package to get the best deal. And if you just go out and get 3 agents to quote it up, and and whoever gets the best, gets the market quickest wins, it probably is to the detriment of the insurance, to the actual association. So interview brokers and then have them go out to the marketplace.
Well, and because we see conflicts of interest all the time. We get emails and all kinds of notices about them. Also, keep in mind that just because you have a relationship with someone doesn't mean that they're the best option. That they're going to be looking out for your best interest, and make sure that your board is also well aware of any potential conflicts of interest, good or bad, right? But that there may be with insurance agents out there. Do you find that most now in the industry sell multiple carriers? Is it, or there's still some kind of solo act insurance agents?
There's still some solo acts, but there's some that represent certain carriers, only a handful. Some have all of them. Some have all of them minus a few. If you guys ever want, there's what we call an RFQ, request for qualification, to see kind of who the best is that agents are used to responding to. And I could help give you guys one or provide you. It has nothing to do with our company. It's just kind of a best practice if I was an association board to put that out and then interview the insurance broker.
Well, and that's what I was going to say. What are you looking for? Obviously you want to have somebody that you can communicate with, that you think you could have a good relationship with. What are some of the things people should be looking for when auditioning, I guess, an insurance agent?
Yeah, so I think, number one, obviously access to the markets, right? So you want to make sure they can get to the insurance carriers. That's kind of step one. But then step 2 is, what does your support staff look like? How many, so outside of the sales guy who shows up, how many associations or how involved in real estate are they? And then secondly, is the team below that person, how many associations are they dealing with? Is that all they do? And how long have they been there and kind of their background? And then the claims team internally. A lot of insurance brokers have a claims team. What's their expertise in real estate? So you're really looking just like you do with a property manager, right? Or a lawyer.
Sure.
You want to find those that have a expertise in that arena.
Excellent. Well, and again, request for qualification. If you want to get a better idea of the makeup of the insurance agents that you're kind of feeling out to represent you, Jimmy's going to work with Dean here on making that accessible.
On our site.
Yeah, perfect. Exactly.
Yep.
And so for those of you looking for that kind of information, you can email us, help@thecondocoaches.com. That's help@thecondocoaches.com. You can also call us 813-331-5415, 813-331-5415. Dean loves the late night calls and answers them all personally. Now it goes to a voicemail, and then we make sure that the right condo coach, is available to help you and helps you through whatever your issue or your question is. And so same goes for our emails. help@thecondocoaches.com. That's help@thecondocoaches.com. That wraps up another show. Say goodbye, Dean.
Bye-bye. Thanks, Jimmy.
Thank you, guys.
You've been listening to the Condo Coaches, brought to you by lmfunding.com. Find us online at thecondocoaches.com and join us this same time next week as we help you navigate life in your managed community.